Hello everyone, and welcome back to another CRT YouTube video. Today's video is particularly important, so be sure to watch it all the way through and take notes. Today we'll be diving into the world of turtle soup, exploring the different types, how to effectively trade them, and where to find high probability turtle soup setups. We'll cover all of this in detail, so stay tuned. I do want to shout out Romeo for bringing light to turtle soup on CRT, and also Sham or Speculator for helping simplify it, and also the video idea. Now let's get into it. Let's begin with an introduction to the concept known as turtle soup. Essentially, turtle soup refers to what are commonly called false breakouts or liquidity purges of significant swing points or price ranges. This occurs when key swing levels or ranges are rapidly purged, only to see the market quickly reverse, making the initial breakout a false move. These occurrences can be referred to in various ways: turtle soup, liquidity raid, false breakout, or liquidity purge. In essence, they are a deceptive market move that sweeps liquidity, often leading to the manipulation of retail traders. Now, turtle soup has been around since the 1980s, so it is a proven strategy. Turtle soup is essentially a strategic market move that deliberately drives the price above the previous highs or below the previous lows, with the primary aim of sweeping liquidity. After the liquidity is captured and the orders are filled, the market swiftly reverses direction and expands explosively in the opposite direction. That's the essence of turtle soup. In the next slide, I will introduce you to the various types of turtle soup patterns. The first type that we will cover is the bullish turtle soup. This occurs when there is a false breakout or liquidity purge below key points within a bullish market or structure. The first type we'll cover is the bullish turtle soup. This occurs when there is a false breakout or liquidity purge below key lows within a bullish market or structure. Bullish turtle soups typically happen when the draw on liquidity and market bias is geared towards the high or upside. For optimal results, it's crucial to integrate bullish turtle soup setups with other trading concepts. Additionally, always combine them with CRT, just as we've done when trading ranges. Here's what a bullish turtle soup looks like. In this scenario, the draw on liquidity and the market bias is bullish, so we'll focus exclusively on turtle soup setups that align with the higher timeframe's bullish draw on liquidity. We will only trade those that purge the lows and capture liquidity beneath those levels. So here, you'll want to measure this using key dealing ranges and levels, as most significant turtle soup patterns typically occur at crucial levels and in discounted areas of the premium. What happened here is that the price purged a low, capturing liquidity, and then immediately reversed and expanded upwards. In this bullish structure, each time the price expands higher, it consistently targets and takes out counter liquidity with the aim of free balancing the entire range. You'll notice that more often than not, the low is purged by a candle. This setup can potentially be traded as a CRT on a lower time frame, especially if it forms at a key time. When a CRT is purged at a key time, it tends to be highly probable in terms of both objectivity and simplicity. Now, the next one we've got is a bearish turtle soup, and basically they're a false breakout liquidity purge above the high in a bearish market structure, bearish environment, or bearish condition. Bearish turtle soups occur when the draw on liquidity is simply lower, and again, just like with any other concept, make sure that you trade it only when incorporated and integrated with other key concepts. Here is a graphical representation with again the same framework as before, but in the opposite direction. And here we can see a bullish turtle soup combined with a bearish CRT. Now, we've reached the final and most crucial section of this video, identifying high probability turtle soup setups. This is the most important part of our discussion, where we will explore how to effectively identify and execute the most promising turtle soup trades. To achieve this, we'll integrate the concepts we've covered so far. The key takeaway here is that the most successful turtle soups typically occur at CRT, above CRT, or below CRT. These setups are particularly high probability because they happen within time ranges that are more objective and reliable compared to other ranges. The second point, though somewhat conventional, is crucial. Turtle soups that form at higher timeframe levels, as well as lower timeframe key levels, are especially significant. Utilizing both of these levels can enhance your trading strategy, and I've already demonstrated how to effectively apply this approach. While it may seem a bit conventional, it's crucial to emphasize the importance of higher timeframe key levels when trading these concepts. These levels play a fundamental role in turtle soup strategies and other related concepts. Always consider high timeframe key levels and use them in conjunction with the direction of the higher timeframes draw on liquidity to identify the most promising turtle soup setups. Another key consideration is that high probability turtle soups often form at the highs and the lows of the previous weeks or days. You can also look at previous trading sessions for this purpose. These levels represent dynamic swing points that are derived from 4 time-based factors. These levels represent dynamic swing points that are derived from 4 time-based factors, making them significant for identifying optimal turtle soup setups. Another crucial aspect to note is that turtle soup setups are most effective during the market's distribution phase. We'll delve deeper into what the distribution phase entails and how to integrate it in an upcoming CRT turtle soup video. For now, just keep in mind that the highest quality turtle soups typically occur during both the distribution and manipulation phases of the market. During the manipulation phase, turtle soups tend to be the most explosive and rapid, while in the distribution phase, they are generally smoother and more gradual. Keep this distinction in mind when assessing potential setups. As we move to the next slide, you'll notice the CRT range on the higher time frame with a significant higher time frame key level positioned just above it. The optimal turtle soup setup occurs just above the CRT range high, followed by a purge at a key time when the higher time frame key level is tested. The initial target should be set at 50% of the range, with the ultimate goal being the opposing end of the range. Here's another high probability framework. When the highs or lows of the previous day, week, or session are purged at a critical time, and this coincides with testing higher time frame key levels, it creates a strong A+ setup. Let's examine a few examples. In the first case, we have a CRT that was purged at a key time. Following this, a high probability turtle soup setup occurred, leading to a rapid and explosive price expansion. Here's another example. We have a turtle soup setup where the framework remains consistent. The price tested a higher time frame key level, purged the high at a key time, and then we had a high probability turtle soup setup work out flawlessly. I hope you guys enjoyed. I do upload an indicator video every Wednesday and an ICT Concepts video every Sunday. I am currently in the middle of a mini-series on CRT. It's probably going to be about 10 to 15 videos long. If you do want to keep up to date with my daily trades, follow me on Twitter or join my Telegram. If you did enjoy, please leave a like. Also subscribe if you haven't done so already, and turn on those notifications so you don't miss out on future trading content. Happy trading. See you in the next one.